India's life insurers lost nearly a quarter of their customers this year. That is tens of millions of people, mostly low income, suddenly left unprotected. And here's the strange part, nobody seems too bothered by it. Not the big private insurers, not the banks, not even the regulators. You would be expecting sirens to be blaring about something like this. Instead, it's mostly silence. So, what happened? Was it a fraud? Was it a market crash? Was it a sudden public health emergency? Not quite. The answer is more subtle and messier. What we are seeing is the quiet unraveling of a fragile ecosystem, microfinance and insurance, once hailed as a breakthrough for India's poor. And here's the thing, for years, a large part of India's life insurance coverage came bundled with microloans. Take a loan, get insured, simple. But when those loans slow down, so does the insurance. Now, defaults are rising, lenders are backing off, and insurers are walking away. And behind that number story is the story about bad lending, regulatory indifference, and even a lingering question about death itself. Today, we are going to look at the collapse of credit linked life insurance in India, why the industry saw this coming, why nobody is fixing it, and why the most vulnerable are once again paying the price. If life insurance is supposed to be a safety net, then how did 47 million people fall straight through in just 1 year? Welcome to Daybreak, a business podcast from the Ken. I'm your host Nigda Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahel Philippos and I will come to you with one business story that is worth understanding and worth your time. Today is Thursday, the 10th of July. Let us start with the headline. In FY 2025, 47 million fewer people were covered by life insurance than the year before. And that is not a blip. It is one of the steepest drops that India has ever seen, and yet, no panic. Executives from India's top private insurers, from HDFC Life to ICICI Prudential and SBI Life, were not surprised. One even called it expected and anticipated. But it shouldn't have been. Industry veterans say that this kind of collapse usually follows a major shock, like a pandemic. But this time there was no external trigger. So, where did this damage come from? The answer is microfinance, a sector that is quietly imploding. For years, microfinance institutions or MFIs have been aggressively lending to low income borrowers. And those loans often came bundled with group credit linked life insurance. It's a policy that kicks in if the borrower dies, meant to protect the family and the lender. But as defaults rise and lenders retreat, insurers are stepping back too. And the result is a mass loss of coverage. It's not just the numbers. In February 2025, a group of life insurance premiums dropped nearly 19% year on year. And that is after a nearly 80% surge the year before. Volatile? Definitely. Sustainable? Not really. That volatility is baked into this model because group insurance is tied directly to microlending. When loan volumes explode, so does insurance. And when they slow down, the coverage vanishes. And now it is vanishing and at scale. A rule change in 2024 tried to separate insurance from aggressive lending. It made it harder to push both products together. At the same time, insurers are seeing more death claims. Mortality rates are now nearly 75% of pandemic peaks, even higher than during COVID's worst. Some blame poor policy, others point to post vaccine mortality data. Researchers like the epidemiologist Amita Banerjee have flagged it. The Indian Council of Medical Research has dismissed it. But the elevated death claims are real and expensive. One expert summed it up to my colleague, the Ken reporter Sudeshna Ray, like this. The microfinance model is broken and nobody wants to fix it. Not the MFIs, not the insurers, and not even the RBI. More on this in the next segment.
Hi, this is Rahel, the co-host of Daybreak. I'm quickly pausing this episode to share something very exciting with you. We are hiring. We are looking for someone in the early stages of their journalism career. Maybe you're fresh out of journalism school, or you've done a couple internships and projects and are eager to take on your first full-time role in audio. I'm looking for a co-host to help launch a brand new podcast from the Ken. This is a full-time role, and you'll get to work closely with me as well as the rest of the audio team, right from story pitches to interviews to shaping how the final show sounds. If you're curious, ambitious, and absolutely love audio storytelling, we would love to hear from you. All the details will be in the show notes of this episode.
India loves to talk about financial inclusion. Over 550 million people have Jan Dhan accounts. More than half are rural, most belong to women. It sounds like progress, and for a while it was. For many of these women, financial access meant three things: a bank account, a microloan, and life insurance, all bundled together. It was neat, efficient, and gave the illusion of protection. But now that loop is breaking. Look at the data. The number of microfinance borrowers has not grown much, just 6.9% in 7 years. But the total loan book, that is up by 22%. Lenders are not finding new customers, they're just lending more to the same ones. And that means more debt, more risk, and more defaults. And when defaults rise, credit linked life insurance takes a hit. It is a domino effect. No new borrowers means no new loans means no bundled insurance. Plus, the quality of lending has slipped. During COVID, lenders dropped strict standards. They gave out loans freely, sometimes to borrowers already juggling multiple debts. Many of those people now cannot repay. An MFI executive put it quite bluntly. They said, you'd expect lenders to stop funding defaulters, but here they don't. One non-bank lender found 55,000 borrowers with loans from more than 6 lenders. And that is the scale of loan stacking. Now, technically, self-regulatory norms exist. They cap borrowing at 4 lenders and 2 lakh rupees per borrower. But those caps are ignored quite often. To understand this better, let us talk about why people borrow. Not to build businesses, but for consumer goods. TVs, scooters, stuff that does not generate income. So borrowers take more loans just to pay off the old ones. The debt piles up and insurers, they walk away. Meanwhile, mortality claims stay high. Some scientists link this to vaccine side effects. Some don't. But regardless, insurers are recalibrating. They are raising term life premiums and reviewing risk models. And all of this is pushing insurers even further out of reach for people who need them the most. And what about the regulator? In June, the RBI finally spoke up. It warned of high interest rates, coercive recovery, and rising indebtedness to microfinance. But that was it. No real action, no structural reform. Critics say that the RBI's silence is not surprising. After all, these loans boost the numbers for flagship government programs like Mudra. The more MFIs lend, the better it looks for policymakers, even when it is toxic lending. And the worst part? The traditional pressure mechanism, joint liability, is broken. No more group repayment, no more peer pressure, and no incentive to repay. Add to that political pushback on aggressive recovery, and lenders cannot collect anymore. So they stop lending. Then the insurance stops too, and the people, they just left hanging. In just 1 year, nearly 50 million lives quietly slipped out of India's insurance net. Not because of a war, not because of a disease, but because of a model that stopped working and a system that let it break. Everybody saw it coming, nobody stopped it. And as always, those who lose the most are the ones who had the least.
Daybreak is produced from the newsroom of the Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.